Hello, traders. This is your trader's friend. Thank you for joining me today for another video. I'm so glad you can be with me. Today, I'd like to talk to you about two candles that are very tricky candles. The first candle I'm going to talk to you about is the hammer. And this is a candle that you want to pay particular attention to. You'll recognize the hammer because the shadow is twice the size of the real body. So this is a pattern that you want to look out for. Sometimes and many times in Forex, you're going to have a small upper shadow. But the thing that makes this so tricky is you'll look at the previous candle and you'll see all of this bearish action. Now you have a rejection of lower prices here, but you still have all of this bearish action. When this candle got started, you continued in that bearish fashion until you got to this low before price reversed on you. What you want to do is to be sure you wait for the close of your candles. That's so important. I've done this, other traders have done it, and this is how we gotten. We get into a candle before it closes based on the previous candle, and then we end up stuck at the bottom. And this is why this is a particularly troublesome candle, because you'll see how strongly price reversed before going the other way. So when you see a hammer develop on your chart, and it doesn't always work out like this, it's time for you to look to protect your profits, especially if you are short term trading. Now, this is another signal that I want to talk to you about that's particularly troublesome. This is your shooting star pattern, and like your hammer, the shadow is twice the size of the real body. This is another tricky one you want to look out for. What you'll see here is that you were in a short-term uptrend, and price is moving strongly bullish here. You have a strong bullish move on this candle, and if you gotten in prior to the close of this candle, chances are you got stuck at the top. What you'll also notice, and I think it was true in the last segment that I showed you, is that you have a resistance level here. Now, price actually pierced this level, but you'll see that it was rejected to close back inside. Now, those are two indications that it's time to protect your profits. The first thing that you would want to be looking at is this resistance level. If you see a candle close to resistance, you do not want to take that trade to the long side. Now, if the trade closes under that resistance level, then you definitely don't want to take it to the long side. So you'll see that prices were rejected here. It closed under the resistance level, so at that point it's time for you to start to look to go short. You'll see that it was pierced again. It could not sustain the momentum and it fell back down. So the two patterns you want to look out for again are your shooting star pattern and your hammer. Traders, have a great trading week. Let's make this our absolute best trading year ever. You can do this. It's not rocket science, but practice, drill, and rehearse on your practice or your demo account. This is a $4 trillion a day market. You are competing against some of the most savvy traders in the world. Study your charts. Your charts will always tell you what's going on or what's about to go on. Have a great trading week. Love hard, live well, have fun.